Hello and welcome to the MFG Advice AML CTF session for 2026. Before we begin, we always have a disclaimer that explains that this session is for MFG Advice authorised representatives and staff, is not for distribution to third parties and is subject to change with legislation, policies and processes. It's current as at the date of publishing in January 2026, and of course there is a general advice warning there as well. Okay, so this session is around anti-money laundering, counter-terrorism financing, and proliferation financing, and it's governed by the AML CTF Act of 2006, which is managed by AUSTRAC. So as financial advisors, we provide a designated service and therefore we need to comply with the AML CTF Act. And that, of course, includes identifying the client, but also risk assessing the delivery of services. We need to identify, assess, manage and mitigate the risks of criminal conduct, particularly relating to money laundering, terrorism financing, and proliferation financing. Money laundering is the process of concealing the illegal origins of money or property. So it's making it appear legitimate and involves dealing with funds derived from crime or used in crime, often through complex transactions to hide the ownership, and can also involve unexplained wealth that can't be proven as lawful. Aspects of money laundering can include concealing the origin of monies, dealing with the proceeds of crime, enabling serious crime, and of course, other complex methods. Terrorism financing is providing funds to support terrorism activities, whether from legitimate or criminal sources, covering everything from purchasing weapons and planning attacks to supporting daily living expenses, propaganda, and networks of terrorist groups. Proliferation financing is the act of providing funds or financial services to support the development, acquisition, or transport of nuclear, chemical, or biological weapons and their delivery systems in violation of law, including funding any part of that process. This is an excerpt directly from the AUSTRAC training session, the AML CTF Essentials for Money Laundering, Terrorism Financing and Proliferation Financing Risks. And it looks at what financial advisors should be doing in the process of considering AML CTF proliferation financing risks. So at the start of the process involves identifying what the risks are, assessing the inherent risks, and then continually monitoring our risks as well. So to do that, MFG Advice complete a AML CTF program every year. So this is available on the advisor login section of our website. Under Schedule 3 of our AML CTF program, you'll see our risk assessment. And this shows how advisors and the licensee identify the risks of money laundering and terrorism financing, assess those risks, manage them, and mitigate. So there's several pages in that schedule that look at what sort of risks financial advisors and licensees might be faced with in providing advice services on a day-to-day basis. Then we consider under the assessment tab the consequences to advisors, to clients, to the licensee, to society in general of that risk coming to fruition, then the likelihood of it happening, and then we, through those means, evaluate the risk level. Then we put in place our response, our processes and procedures that we can put in place to manage or mitigate that risk. So risk awareness, if we have a think about the types of risks of AML CTF that we might face as financial advisors. There is quite a broad list here. It is by no means exhaustive, but we certainly have gone through a process of identifying which risks advisors may face. So it's more than simply just getting a client ID. It's considering if the client is engaged in a business which involves significant amounts of cash, if there is a clear commercial rationale for the customer seeking the designated service that they're looking for. It's about identifying if you have a politically exposed person who may be at greater risk of money laundering or terrorism financing. You might become aware of funds that are difficult to verify, and that could be a risk that you identify. There could be secrecy requested by the client around their financial affairs. Perhaps the beneficial ownership of the assets where it's a non-individual customer, so a company, a trust, a partnership, or some other entity, and it becomes very difficult to identify or verify who the beneficial ownership of the monies may be. It could be that a non-individual customer is in a high-risk jurisdiction, so somewhere where perhaps overseas where there is less rigor around managing terrorism financing or money laundering risks. There could be a one-off transaction or where there's always been ongoing transactions. It could be difficult to understand the business relationships or series of transactions that's gone through a client's account. The customer may accept or make payments, for example, electronic fund transfers to or from accounts which haven't been identified, so potentially foreign accounts or accounts in another entity or name, where the client makes withdrawals or transfers instructions via phone or fax. So we haven't met the client physically. I mean, fax is not very often used these days, but where you're receiving advice via email or telephone, but it's hard to verify the origins of the client. So there are some of the risks that you could consider. Certainly there are quite a number of other risks to take into account. So I'll leave this for you to have a look through in your own time and have a think about the risks that you believe you could face when you're working with clients around different types of crimes. So what types of crimes could be associated with some of these risks? So obviously money laundering, where the money has been wholly or partially derived by crime. Money or the property is used for crime. The value of the money or property is grossly out of proportion with the person's income or expenses, or the transaction enables crime, like child exploitation, drug trafficking, sex trafficking, scams, fraud, terrorism, proliferation of weapons of mass destruction. Sometimes advisors have a risk of being faced with clients who are at risk of tax evasion. So we're not talking about clients who are looking to legally minimize tax as part of their overall strategy, but actually are looking to evade their obligations to pay tax or commit fraud. Accessing funds or information that they shouldn't be. Terrorism financing is set out under the Charter of the United Nations Act of 1945, and there's different sections listed there which look at getting funds from terrorists or dealing with frozen assets, making it available to people who are under a prescribed targeted financial sanction, for example, or corresponding offence against the state or territory of foreign law, that enable purchasing of weapons, vehicles and explosives for a terrorist organisation, or generally supports any terrorist organisation. The crime of proliferation financing is also covered by the United Nations Act of 1945 and the AML CTF of 2006 and the Autonomous Sanctions Act of 2011, and it looks at proliferation of weapons of mass destruction. Another thing that we need to be aware of with crime that falls under the AML CTF risk is cyber-enabled fraud. And we did touch on this in our cyber session late last year. And certainly cyber risks are becoming a significant issue as we're looking at advancements with AI, advancements with different software and access. Everything is electronic these days, of course. So privacy and protecting clients' personal information means also protecting them against cyber-enabled fraud. So that's certainly a risk we need to be aware of. And of course, welfare fraud is something that financial planners are at risk of facing, where clients who are not looking to legally access social security benefits from Centrelink, but potentially misrepresenting their financial position or their eligibility for government welfare or benefits in order to have an illegal advantage. Risk assessment is identifying the consequences of the risk that we're facing. So, for example, accepting cash payments could result in introducing illegally gained funds into the legal system without documentary evidence. So other consequences may include unwittingly assisting criminal activity like money laundering, terrorism financing, or proliferation financing. So this is why we don't deal with cash, and that's such an important part of managing and mitigating the risk of crime. We also have to consider the likelihood of risk. So we're looking at how likely is it that we're going to be faced with this risk? Is it unlikely, possible, or quite likely? The evaluation of that risk then becomes low, medium, or high as part of our risk assessment in our AML CTF program. The risk response is our process to mitigate and manage those risks. So it's included, but not limited to, identifying the client with the current ID. So we absolutely have to have the client's current ID on file. Advisors completing the AML CTF training, this training that we're doing now, to identify, assess, and respond to risks. The licensee maintaining the AML CTF program on your behalf. So you certainly don't have to have your own AML CTF program unless you're providing another designated service, which we'll talk a little bit more about in a moment. But we maintain the AML CTF program, which includes the changes that have come through and are implemented in March. We've already implemented those into our AML CTF program, and certainly there are additional changes coming through in July that we have accounted for us, but for those who have a separate designated service, might actually need to have a look at. The risk response also includes documenting the basis of advice to clients, so including completing the client fact-finding process, completing the advice documentation, so SOA or ROA, maintaining records and file notes on the client file, and following the MFG advice policies and processes relating to no cash handling, using the APL, so that the products that you are recommending have already been ensured that they don't have these other risks as part of their process, complying with the cybersecurity training and policy that we went through last year, managing conflicts of interest, and of course, reporting any suspicious matters. Okay, so client verification, what do we need to do? Advisors need to have current ID on the client file. You need to record the information and, of course, report suspicious matters. So usually you'll be dealing with an individual or sole trader where you're providing personal advice to retail clients. However, there could be instances where you're dealing with structures like partnership structures, trusts, companies, or other entities, and there are FSC forms available for each of those entities as well, and they're available on the login section of the MFG Advice website, but you can also access the FSC identification forms online. A simple Google search will bring up the FSC forms. So the ID should be recorded and saved in the cybersecurity client file. So that means a safe structure like Advisor Logic, or if you're using Microsoft 365 cloud folders, making sure that's got the two-factor authentication on there as well, or any equivalent cyber secure storage solution is fine. It's essential that the client ID, and that's to make sure, just to be clear, that's to protect the client's privacy and the storage of their personal information, because their ID has, of course, their date of birth, address, and it's designed to verify their identity. So it's very important that the ID is secure to meet our obligations under cybersecurity and, as I said, to protect the client's information in line with the Privacy Act. So a few tips or important requirements that you have to keep in mind. Both the front and the back of the ID should be on the client file. Be sure to obtain ID for each person. So if your advice is for a client or a family group, that you've got everybody's ID on file. And you have a process in place to ensure that expiring ID is replaced. So when Kath and I were completing the compliance file reviews in October, November, we always look to make sure that the ID is current and on file at the time that the advice is provided. But where a client is an ongoing service client, so they're paying ongoing service fees and they're receiving a review at least annually, that they should certainly have, as part of that review, the client ID must be current, and it certainly needs to be on file as current. So have a process in place to make sure that you are updating that ID and replacing it when it expires. So what actually happens if you don't have current client ID on the file? So it's actually a really serious offence, and it's a breach of our obligations under the AML CTF Act. Breaching AML CTF regulations can lead to severe consequences for the individual and for businesses. It can include court proceedings, enforceable undertakings, infringement notices, and remedial action. AUSTRAC can take enforcement actions such as issuing written notices, refusing or cancelling registrations, applying for a civil penalty order under the Federal Court of Australia. And those penalties can include substantial fines, imprisonment, and even suspension and revocation of our business registrations. So non-compliance can also result in increased regulatory scrutiny, ongoing monitoring, and potential for criminal charges against the advisor as well as the licensee. So to avoid the consequences, businesses need to maintain and implement our effective AML CTF program, including our risk assessments, customer due diligence, and our regular audits. Okay, suspicious matters. So forming a suspicion must be formed in good faith based on the factors known to the person making or preparing the report. Both the AML CTF Act and related acts provide immunity from any action, suit, or proceeding for honestly reporting a perceived or suspicious matter. Tipping off, if a suspicious matter arises, you need to report it immediately to the AML CTF officer only, which is me. The Act prohibits disclosure to anyone other than the AML CTF officer and AUSTRAC. It's a criminal offence which carries a maximum of 2 years imprisonment, so pretty serious. Okay, so advisors and the licensee are required to report suspicious matters to AUSTRAC. There's no dollar limit, and you don't need to be party to the event to form a suspicion. You'll see here the Financial Crimes Red Flags Guide for Financial Planners. This document's been around for quite some time. It's one of the resources, and there are many resources available on the AUSTRAC website. But if you do need more information, please reach out to me at MFG Advice, or you can even have a look at the FAAA website, has some information on it available in relation to AML CTF as well. Okay, upcoming reforms and changes. So this is what I referred to earlier. There are actually some significant changes to the AML CTF regime that will impact financial advisors and licensees. Comes into play at the 31st of March this year. There are new services that are now going to be regulated. So that's accounting, real estate, legal services, which will now fall under, and mortgage broking, I believe, as well, will all fall under the AML CTF regime. So you will need, if you provide those services, you'll need to register directly with AUSTRAC. And there's a lot of information around that on the AUSTRAC website. You'll also need to have your own AML CTF program in place, and processes, obviously a risk assessment, and the processes in place for cyber secure storage of ID. Harm prevention approach to tipping off offence commences on the 31st of March 2025. There are links to that. This is already incorporated in our programs. There's nothing you need to do there. There are enrolment updates. There are new AML CTF program requirements. So there used to be a Part A and a Part B. And for financial advisors, you only provide item 54 services. So you're now exempt from many of the other governance obligations, but you still need to ID your client. And there's just a Part B as part of our AML CTF program. So a lot of the Part A requirements are now gone. The reporting groups replace designated business groups, which means that you were previous, we're basically, it's the same for us, in the sense that you will fall under MFG Advice, and we're registered. CDD obligations, which is the customer due diligence requirements, is in place if you provide other designated services, as in not just financial advice. So financial advice under MFG Advice is an item 54 service, so you'll be exempt from the ongoing CDD obligations. If you are also providing accounting, mortgage broking, real estate services, or legal services, you will need to have those appropriate entities registered and comply with your CDD obligations. And there's a new report that licensees or the AML CTF officer needs to complete when reporting a suspicious matter. Again, that's not going to impact you directly unless you have to be registered yourself. Okay, so what do you need to do? So services provided, as I mentioned, under MFG Advice or Item 54, provider exempt services. Most advisors will not need to do anything new. You just continue to diligently risk assess your client engagement for money laundering and terrorism financing risks, and ensure you have the current client ID on file for all clients. MFG Advice have already updated our AML CTF program, risk assessment, CPD training, and file and review audit processes to comply with the March 31st, 2026 reforms. Advisors who also provide tranche 2 services will need to comply with CDD obligations by the 1st of July 2026. If you provide a new designated service, tax and accounting, legal services, mortgage broking, real estate, or another designated service under tranche 2, your registration and CDD obligations will apply to you. Visit the AUSTRAC website, the FAAA AML CTF hub, or speak to your relevant professional body for further guidance. If you provide a new designated service, one of those that I've just mentioned, you need to enroll with AUSTRAC directly by the 1st of July 2026. Penalties will apply to providers who don't enroll by the 29th of July. That's not a grace period. That's just when they start implementing the fee. So you need to be on board by the 1st of July 2026. Okay, that's a lot of information on AML CTF, and I hope it's been very helpful to you. MFG advisors are eligible for 1 CPD point in the area of regulatory compliance and consumer protection, but you will need to complete the 4 quiz questions that follow this CPD session. And if you're on Kaplan On Track, it will automatically be completed and credited to your training records. If not, please get in touch with me. Have a great day. Thanks so much for your time. And if you have any questions, as always, please reach out. Thank you.